Hi there and welcome to this week's edition of Bulls vs Bears. Boys, we're all back on board. You got back from glamping last week, Jonathan?
Oh, yeah, that's exactly where I was. Yep, that's correct.
It was raining so hard we suggested that you might have had to use your yacht to get through your glamping thing.
That's it.
But all back on deck this week. It's been a pretty busy week, apart from propping up Ausbiz the previous week. You've been on a fair bit this week, mate. Run us through it.
That's right. As a Chief Compliance Officer.
Oh, yeah, Chief Compliance Officer. Yeah, General Advice Warning.
Let's do that first.
Yes, these are thoughts and opinions only. It's not financial advice. Past performance is not a future indicator of performance. Please consult a financial professional before making any financial decisions. And this information should not be your sole resource for making those decisions. Rightio. So yeah, run us through. You're on with Ben Clark this week.
So I was on with Ben Clark, and I gave. I think Andrew said that was a record 9 buys.
Oh wow! You guys were pulled up.
Yeah. So there was only like 3 double buys, but I just gave buys on everything. And the main reason I said that is, and I started to talk about it more, mainly because I saw in the AFR for the first time about a week ago, is the flow of money from super funds and index ETFs or low-cost ETFs. I've been following this story for a couple of years in the US. In the US, passive flows are now well over half of actual all flows. Mm-hmm. I think it's something similar over here. And what it basically means, the term passive is incorrect. It's actually just simple. So if money goes into that ETF, they buy stock.
Yeah, so 401k for the US,
yes.
Similar to super here.
Yeah.
Or exactly the same.
And that's the main reason why Commonwealth Bank just keeps getting more expensive.
Well, when the MAG7, the concentration actually begets more concentration.
Exactly.
More index flow.
And that's all I was saying. Look, I wanted to, for some reason, I had all large caps on my stock list, so I said, it's a large cap buy. Simple as that.
Fair enough.
So that was my main thesis. I'm not ultra bullish. We have Trump coming in next week.
Yeah.
So that could really throw we're either up 1,000 or down 1,000 next week. I really don't know. So
yeah, man, it is a bit. Well, 1,000's not that much these days.
Oh, that's true. That's true. But yeah, that's basically it. So the whole reason why I was saying buys where they were all large caps, and if you understand how the passive ETFs work, is that the money just keeps going to the large caps.
And the main feature story we got as well this week in the weekend report, weekend edition is so the US rally also actually did broaden a little bit this week.
Mm-hmm.
So I think that probably ran out of sellers in everything else except for the MAG7. I think is about the only thing. So although volumes have been a little bit low, but we'll get to it a little bit later on. But you can see on the weekly,
mm-hmm.
Apple in particular disappointed. I've said on a number of occasions, can't really work out why it was up here. It was up there because of what you were saying.
Yeah, of the passive bid.
But the China sales...
That thing is, the passive guys, they don't do any research.
No. Well,
if money goes in, it goes into the big stocks.
Well, it has to. That's their mandate.
That's
They
it.
are legally required to do it. So valuation is not a concern.
Mm-hmm.
But iPhone sales rumoured to have slipped at least 5% in December. And then on top of that, I think last night there was rumours around China sales being significantly weaker as well. Ooh. So I think Apple was down 4.5% last night. But the S&P overall was down last night. But if you look at the heat map, it was only the MAG7. And over the course of the week, I think 4 out of the MAG7 were largely down like 0.5%.
Yeah.
But there was 3 of them in particular. Apple and Nvidia being heavily sold. I think Nvidia was down 6.5%. So. Yeah. And that was very weird because TSMC actually announced increased volumes, better than expected volumes. So I saw on my Twitter feed, everyone was super bullish, going, Nvidia's going to take off again, and maybe even actually Kramer did as well.
Yeah, so
Kramer of the week there is taking that TSMC lead.
And the thing is though, from a chart perspective, it's like it looked like the market was rolling over. The Dow actually made a new low for me, but then the inflation prints were softer. Yeah. So PPO came in softer. the market sort of stabilized, and then the CPI came in softer, and then that bounced out of those lows. So
that was the figure. Sorry, it wasn't the employment number. If CPI was 0.02 higher, it actually would have been on expectation.
That's right. It was. I think it was. It was a rounding error. Like basically.
Well, no, it was no rounding error. It was whatever it was. It was 2.848, and if it had been 0.02 higher, it would have actually come in line. So. But look, people clutching at straws probably to back their own argument, I would say, overall. Like, they're, it wasn't really, it was in line, basically. The same as the Aussie employment this week. It was, 56,000 jobs on top of the 32,000 jobs created. But the newspapers just wrote what they wanted to because the participation rate was up. So the unemployment rate went up to 4% from 3.9, and they said... all I could see all over the newspapers was unemployment rate rises, whereas 80,000 jobs gained in Australia is actually pretty massive. But mainly, I guess the participation rate's going up because, if you're a family, both parents need 2 jobs to pay the mortgage these days in Sydney.
Or maybe a second job.
That's what I mean. 2 jobs each is what I meant. Sorry, I'm not clear on the joke. But Kai, what caught your eye in the local stocks this week?
Yeah, I mean, I think obviously Star Group's been the highlights section for a while.
Yeah, about 3 weeks in a row.
For a while, yeah, so it's...
And one of those weeks was December.
Yeah, so it's really been hammered in the... It went down as low as 12 cents, which is very, very low. And, we talked about how much... undervalued compared to net tangible asset it is, but it's potentially debtors playing a role. But there's something new that's come out. Basically, Macau businessman, he's acquired 5.5% stake, regardless of all the news that's come out. Obviously, they're low on cash flow. They've got about 79 mil left, burns through about 100 mil every 3 months. So
is he a high roller? Is he going to come over and maybe lay some cash down?
I think there's rumours basically saying that there's potentially like people in Hong Kong looking at an undervalued asset. I mean, it's undervalued if they have the cash flow and they can reform this company.
Not just that. Let's not forget it's a casino.
It's a casino. Come on.
Those things just print money.
When you were glamping last week, the point we made last week when we were chatting about it was we were talking with one of the other guys in the office here was the debt holders are just wanting it to go down so they can get it for 20 cents of the dollar, and the shareholders get screwed. So maybe the price to book's not relevant if their cash flows are just going to eat them alive. So, but I would say if someone starts nibbling away at it and they want to provide cash flow, then it might be a bit of a mad scramble to get it. But if it plays out for the debt holders, and the shareholders get screwed, but the debt holders, because they're prioritised higher. It'd be interesting to see. It'd be an interesting, probably, case study what happens with this thing for university students of the future.
Yeah, but either way, like from a charting perspective, it looked like before this. What's his name? Mr. Wang bought some shares. That was actually looked like a puke to me. So I was like, okay, we had a puke on high volume. Some new buyer was stepping into that volume. That looks like a classic bottom for me. So from here on in, I think that's the low.
Yeah,
but that's just trading. So if the New South Wales government comes out with a bigger fine or something to do with the money laundering, then that changes things. But just for me, that if someone's stepping into that kind of sort of crescenting volume, that usually significant. That's a good buying
good
point.
Sign, yeah. Well, obviously, I did a bit of work today. Was asked for comment from the Herald on the Rio Glencore thing.
Yep.
From a business standpoint, it actually makes quite a bit of sense. So they end up with end-to-end battery minerals. They got the whole portfolio. Two big issues I can see is Rio attracted more ESG-minded investors getting rid of their coal, and they're about to buy a shit ton of coal in Glencore. So Rio's double the size, basically. So they say merger, but as we say with all mergers, there's always a stronger party. It would make them the biggest miner in the world, and it would also, by far and away, make them the biggest copper. So Rio's got Escondido, which was the world's largest copper mine and has been going for like 40 years or something.
Yep.
These guys, Glencore's got like the new Escondida. Like, but what they don't, Glencore doesn't have iron ore, and it doesn't have aluminium or bauxite and zinc, basically. So
so apart from copper, there's no overlap, is there? Like basically,
copper and coal. Rio's getting rid of their coal, divesting. There is some overlap. They've both got gold, but Glencore's got significantly more gold and silver. But as a whole company, if you add it all up, pretty damn good diversified company. However, and I don't see the Americans objecting to this, but Glencore is incorporated in Switzerland, and Europeans love regulations. That is a lot of power in the hands of one mining company for critical minerals. So, and I wouldn't imagine the Chinese would be overly happy with that either.
No.
So, well, unless it was theirs. It's going to have regulatory hurdles. They've denied it, but Bloomberg's reported where there's smoke, there's generally fire.
Yeah.
And if it's been pitched as a merger, not a takeover bid, then it was up to 25% operational efficiencies was estimated. That's obviously fairly loose, but they're very culturally different as well. Glencore's way more aggressive and don't care about ESG, whereas Rio's a bit more conservative and probably, after that whole blowing up the Aboriginal caves thing, they've probably gone back in their box a little bit, Rio. But and a string of other breaches in like BHP did in South America as well. There's a few water tables that won't recover for 100 years after.
Didn't they also have the tailings dam collapse?
No, that was BHP.
Oh, that was BHP. Okay.
BHP definitely had a dam collapse. Either way, mining not great for the environment most of the time. But we need the stuff, so neither's oil. No one's going to go back to candles at night time and not watch TV. But we also had a bit of the retailers. Obviously, Myer and Premier Investments got hit this week as Myer's results.
So
I had that as stock of the day actually on Monday. I was on Elsbeth this week. But Premier Investments is obviously now becoming the largest shareholder.
Yeah.
So it got pretty hammered, and then Lovisa got pretty hammered as well. There's still a few that are lingering towards their highs.
Yeah. So one thing that did come up. So I had Wesfarmers on the call, and Ben Clark just talked about how big the Anko brand is getting.
Yeah.
So they're actually even reselling that to Target in the US.
Yeah, right.
Anko. Yeah, that's how I said. Like, I thought that's a great.
Having a family of 9 kids, I'm actually 1% total of Anko sales. It's like everything is nearly Anko in the house.
So that means you spent $6.
Oh, really? Have I? Actually, you're right.
That's how cheap it is.
Yeah.
But either way, so that's what I thought. So my Premier Investments is that like they've got the department stores. Obviously, Kmart's the discount stores, but what my Premier Investments need to do is they need to come up with their own sort of house brand where they can control the whole supply chain, that's what Wesfarmers does. So
look, they always say the jewel in the crown is Peter Alexander and Smiggle, but in Smiggle I understand, but Peter Alexander, it's $110 or $120 for a pair of highly flammable freaking pajamas, and you can buy the Anko ones that look exactly the same for roughly about $16. So it's a bit of
just don't tell your wives what to try and convince them that they're the same.
There was a company that used to and they got caught for it. They just sold the blue Tiffany boxes, and they got done for copyright. But there was a few blokes that got some pretty big brownie points for buying the box and instead of it. But constrained budgets. You're not buying $120 worth of pajamas.
No.
And Myers as well. Like it's kind of they're like a dropship store. They're
exactly. So that's the thing. It's like I think within their brands or with whatever their lines are, they need something within the house that they can control the whole thing.
Yeah.
And then build up that brand and dominate. But That's just.
I'd buy more at Myers if you could ever find a shop assistant. So you've been in there. This is like wandering around. You can never find anywhere.
Well, that's it. See, that's the thing. Is that like basically, growing up, we go to Grace Brothers. You're like, they had those Boxing Day sales. It was an event. But then what's happening is that now when you go to the actual supermarket or the shopping mall, there's you go to each specialty store.
Yeah.
And then when you get in that larger store, you kind of get lost. So
yeah,
I guess they just have to learn how to adapt.
Yeah, I mean David Jones is half the size in Sydney now. So and Tabcorp, who's on that one? I don't.
So they had a hire or a potential hire from someone in Hong Kong. But they failed to confirm it, so it's a rumor at this stage. The stock did jump.
Okay.
But that's just that's the headline.
Well, Gillian McLaughlin just took over there, so I mean it's competitive. Like I think the last time I looked at it, there's 170 gambling licenses in Australia.
Are there?
Yeah.
Wow.
Everyone was opening a betting agency, like online for ages. So.
Oh, that's right. And then because sports gambling was starting in the US as well,
yes.
there were a lot of licenses that were like, okay, we're going to try and penetrate that market as well.
But the as far as the US goes, we're obviously you can see, and those of you obviously grab the weekend online or get on the email list if you're not watching the podcast. But as you can see, Apple and Nvidia there. Netflix was down 4 and a bit %. Amazon was down 1, and then you got Microsoft, Google, and Meta sort of around about. Tesla was up still. It's maybe a bit of Trump trade. I didn't see anything come from that. But the rest of the market's pretty green. The banks reported really well. So Bank of America, Goldman Sachs, Morgan Stanley all beat expectations. They all sort of rallied. We've got a few more banks to come next week. We'll get to the calendar in a minute.
But they started last night. Who are the big banks? It says Bank of America.
Bank of America, Goldman Sachs, and Citi reported this week actually, but all of them basically rallied. So no, fairly strong results. Apart from that, Taiwan Semiconductor, as we touched on before, they reported higher volumes, revenue up 39% year over year, well exceeding estimates from analysts. And the 4 nanometer chips are now, they've rolled their first one off the production line in America. But obviously the expensive ones, the 3 nanometer chips, that where their strong demand is they're still pumping out of they're still pumping out of Taiwan. So one of the reasons Apple as well, they had a new AI feature criticised and news headlines, which was repeatedly making mistakes. So they need to get the proper AI trainer in there and make sure that it's correct.
They need some new prompt engineers, I think.
And prompt engineers, yes. We've learned a lot of titles this week reading my book. They probably don't want to hire from Google. Was it Google's is it Gemini?
Gemini.
Yeah, that was a disaster.
That was the woke one.
The woke one, yeah, but it was the one that also it controlled the it launched in Paris. They controlled the billboards on the way to the launch, and the whole thing crashed.
Oh God!
Like on the way in, and all the billboards were blank, and so they had to cancel the launch. So pretty embarrassing. So next week, so we've got the calendar here. We've got obviously the presidential inauguration. I'm pretty sure it's Monday. Obviously, we've got the Australian time up there, the bank holiday. But Trump 2.0 comes on in. We got Netflix, and on the Tuesdays, one in MAG7. Halliburton, the middle of the week.
Interesting. So Intuitive Surgical, that's already broken out.
So 52 week, which is one of our high conviction picks, the robotic surgeons.
That's it. If you were a member, you had access to that call.
Yeah, absolutely, and you'd be, I think, 20% in the money now.
That's right. Yeah.
But it was pleasant to see you got multiple broker upgrades leading into next week. So it's pretty, I'm sure there's a joke that the new robot surgeons have got the same personality as the existing surgeons. So fairly
or dentists.
Yeah, right. Leave the dentist alone. They're right. Yeah. But yeah, so look, then we're going to start pumping into. We'll have a fairly big week next week. Not next week, the week after. For like GE used to be massive, but not so much anymore. It's still in the Dow though, isn't it? So and then I dare say we'll have half the MAG7.
The week after.
The week after. So next week, obviously, will be all about Trump.
That's it.
So who knows? My gut feel is buy the rumour, sell the facts. And the reality of Trump coming in may not be as good as the fantasy.
Yeah, so my thinking, my guess is that he hasn't actually talked about the stock market as much.
Yep.
So I think he will implement some sort of tariff or something where some of the Americans will have to wear some early pain, and it just means it'll send the stock market lower.
Yep.
Then eventually, we'll realise it's not that bad, and then he'll right from here.
But he's got such a groundswell of, real patriotism.
Yeah, and that's what we saw when he got in, and then basically the stock market said, "Oh, mate, he's
but
in
like
it."
Tariffs would be like his support base would be like, yeah, stick it to them, and they're not going to make the correlation between that and inflation. His base is not necessarily. It's not necessarily economics professors, I wouldn't imagine.
No.
Not that economics professors have done particularly well in the last couple of years predicting inflation, but yeah. So look, I think it's been talked to death overall, and I don't him actually getting in. I don't think is a further catalyst.
Yeah.
But, I mean, I think the big thing is who knows what he says.
Yeah, true.
What do you reckon, Kylo? I mean, is he like?
Yeah.
Well, one thing I thought was a bit petty is like the blame game going on with the LA fires. Like they politicised that within about half an hour.
That's kind of his mode of distraction, right? Like you gotta build a bigger fire to distract.
You can't get a bigger fire than that. It's now the largest value disaster for American history. They call even though it's a fire, it's classified as a climate thing. I don't know. Some woke person obviously did that. Shout out to the bloke on Twitter that had a crack at me for putting up JLG's stats last week and saying it was too soon.
Too soon, guy.
It's hashtag thoughts and prayers, and apparently that fixes everything. So and ceasefire in Gaza, boys.
So who's claiming that is because Biden's still in power? So
Biden's claiming it.
Oh, Biden's claiming it.
Biden's Democrats are claiming peace in the Middle East.
Under their watch.
Yeah. There was also a list of things about how good everything was going. Inflation's come down, and I suppose he has a point. But I mean, anyway. I don't know. But I mean, ceasefire in Gaza.
Yeah, that's When I opened up my browser and saw that as a headline, I'm like, oh, I didn't expect to see that for a while.
So
I mean, like it's not peace, but it's a ceasefire. At least it's two sides have agreed to something.
Yeah, well, again, I mean, it'd be interesting to get the stats on what the because you can get the stats. It's 511 days between rate cycles on average. I wonder how many days it is between ceasefires getting blown up again, like literally blown up. But Israeli airstrikes continued. 72 deaths on Thursday, so not much of a ceasefire.
But it's a rounding error at 72.
Oh dear! No, please forward your complaints to J Trader 8000. It's headed higher this week. The commodities and
commodities.
Yeah.
Gold. I keep mentioning that. Look, it's just looks so steady, even though the dollar index is headed higher.
That's been the surprising thing.
Yeah.
All this should be down this week, and it's not. Yeah. That's good price action.
Exactly. So gold has hit 27.15, which is kind of like the highs it hit in November and December. So my call is that if it does break that, then we're off to the races. So
and silver's jumped up pretty hard. I think it got. It was one day where it got hit a little bit, but there's been a couple of days. And copper.
So I worked it out. The move from the beginning of the year to where it is now, 11% so far.
Yep.
So I think it's gone from 402 to 448 a pound.
Yep.
That's the strongest out of all the metals.
You can also measure the move in the degree of my smile. So it's directly correlated.
Yeah.
And,
So unfortunately, though, the actual copper stocks haven't rallied as much.
Yeah. It's not $5. I mean, I'll be really happy when it's got a 7 at the front, not a 4. But you know,
oh, absolutely. It's a great move. All I'm saying is like there could be an opportunity buying some of the
it just ticked up every day.
Yeah.
And there's one like Robert Freeland on every time it makes a new high, I think he's putting a post up. Like
Robert Freeland?
I think so. No, there's some, or it might be Dr. Copper, but it's 5 times a day. It's out of control.
Friedland's the CEO of, I forget the name of it, but it's a massive copper company in Canada.
Yeah, I mean, look, they're talking their own balls, but it was massive overkill this week. He was punching it out all week.
Yeah, uranium disappointing. Crude oil just held on.
$80 though. That's pretty impressive. Got to 80, so then hasn't been an 8 on the front for a fair while.
Yeah,
so.
True. Iron ore, that's actually been strong this week, so that's surprising.
Yeah.
And then Bitcoin. So Bitcoin had a flash under 90, and I was like, oh, that looks ugly. And then here we are, back above 100.
You know what's really taken off? Ripple.
Yeah. Exactly. So I wrote that there. So,
yeah.
So I will call Ripple a controversial coin because all the...
A coin?
Well, I'm sure there is one.
Yeah. No.
Yeah, just saying like all the OG, the proper decentralized guys, don't consider it a proper coin.
So then it's way more likely to probably get to the masses, maybe.
Well,
why is it not decentralized? What's the or is it too long of a story?
It's not too long. Like basically, the whole point of blockchain technology is that you have decentralized nodes.
Yeah.
So that no one person can control the actual whole network. And that's the whole network effect. Ripple is very centralized.
Okay.
And so they've come out with rumors that
controlled by the banks, or
well, that's the whole point. Is that it's supposed to be a replacement for Swift.
Yes.
And they talk about it being ISO 200 compliant, so that the banks back offices can use it. But there are no actual reported banks that have used it yet. So that's what I mean. So it could
be tinfoil hats or it could be real. So
exactly right. But either way, the price has shot up. It's actually at $3.30, so it's up another, I think, 10-15% this week. Yeah,
big move.
So for traders, it's fine. But I mean,
what's been really disappointing though? Ether.
Yeah, well, but that's it. I think Ether was my favourite at the start because I thought it by far had the most capacity for transaction. But these new Solana and Ripple have just basically it's now horse and cart still. Like it's gone.
Solana's the new shining toy to replace Ethereum. Or I mean, they do both.
Like
the Dow, Bitcoin being the least useful, but it's just the flag bearer. Will probably just keep its.
No, so the main difference is that because Bitcoin is proof of work, it's kind of like you can't replicate that now. It's like there's been so much time and energy being put into it, you can't replicate that now, and you can't break that network. That's why it's the gold standard.
Yeah.
And then I saw that early on. I'm like, okay, that makes sense. But
it just takes because I remember back in the old days with the bitcoins, if you download a new ledger, it takes literally like a week to download everything. It was like, oh my god. You definitely can't use this as a transaction tool.
Yeah, it's horrible in that regard. It became the store of value because of proof of work.
But like gold, it's pretty hard to go to the shops and chip off some gold.
So that's what they say. Is that they say gold is actually proof of work. Yeah. You actually have to build a mine, dig it, and you dig it out. So that's their comparison. Early on, I thought the same thing with Ethereum. But I remember at the same time, like some smart guys looked into the blockchains and they were like, okay, well, I've got one. I think Ethereum was like 7 transactions a second, something slow. And then some guy comes out, I've got one with 100 transactions a second, and the transaction can be confirmed in milliseconds. And I'm just like, okay, so Ethereum is just technology, and that's going to keep getting it replaced. So I was like, what do you do when the next blockchain 2.0 comes along. I was like, okay, well, it's very hard to.
Well, better been to legitimise from a transaction standpoint. They're going to have to pick and stick at some stage. So
yeah, well, it's kind of it's like currencies, like the US dollar's stuck.
Yeah.
We've chosen not to use the Argentine lira
Yes, no.
as our and that's
probably wouldn't want to be using the Aussie dollar either at the moment.
Exactly, and that's what's happened, or that's what's happening within crypto at this stage, and been happening for the last 10 odd years.
Yeah. So we're now Trust Watch, and obviously our Kramer of the week, which goes to Jimmy himself for the TSMC call. So just to give you a little
have you
this is Trump 1.0, right?
No, have you patented Trust? Because I think that could be I think that could be catchy enough to be a coin or something like that.
Kai, you need to get onto that, mate. I don't know what to do. But that's our celebrity couple name, the Trust. We were going to go with Treylon, but it didn't really work. But obviously, the Trust comes into power this week because they are a power couple. So this is Trump 1.0, right? So this was from Politico. So that
23%.
23% of promises kept.
I think that's higher than I was expecting.
That's exactly what I was thinking. I was like, hold on a minute. He's kept 24 promises, compromised 23, didn't keep 50. That's almost half.
Yeah,
that's pretty good.
I'm more surprised about he compromised on 23. I would have thought it was either he kept the promise or he didn't. So, and look, and you got to.
That's overs. I thought way more.
And at the end of his you got to give the guy credit for one thing. At the end of his presidency, there was nothing in the works and there was nothing stalled. Like if he's good at anything, it's getting the project moving.
Yeah,
so,
it was either in or out.
Yeah. So and it'll be. So that's just to give you a little bit of a taste of, and hopefully someone starts a website so we don't have to manually track this, because folks, can I just put out a disclaimer here straight up, this is a bit of a joke segment. Please do not, we're not keeping actual stats on everything they say. That's for some weirdo left winger to do somewhere.
Right. And let's also say that it's not a political podcast here, we're just talking about the markets. We have to follow the politics because it obviously shifts the money around, and we don't want to be seen as pro-Trump or anti-Trump or whatever. But basically, these are the facts from a financial.
But you know what? For Trump 2.0, he's got one in progress, because didn't he meet with the Denmark president or something this week? Yeah. So Denmark is currently they're not owners. Greenland's
they're the custodians of the land.
Yeah, and then I saw something on Twitter from a Denmark politician going, Greenland's a shit show. Like there's poverty, the economy's a wreck. Like just give it to the US for God's sake. Like it's a nightmare. So I don't. Poor old Greenland probably felt special and is feeling a little bit unloved, But yeah, look, he's not even president yet, and he's already sent a team out there. I don't know. There might be talks with the new Canadian guy in March, but they've got no one until March, because Trudeau stepped down, but they're presidentless.
Yeah, true. Oh, so one thing I would like to say about that is, so ASX was one of the stocks that we talked about on the call.
Yeah. And
it came up that Singapore. Wanted to take it over, but it was cancelled, and I didn't talk about you all actually.
Oh, thank God! Yeah, no.
But
that's definitely an in-house conversation.
But what if we're not going to let Singapore exchange? What if we let the Nasdaq come in?
That was basically
that worked out.
I just overheard way back that the Australian government at the time was very happy for London or the US to maybe do a merger, but probably not Singapore.
That's correct. So I'm just saying, could we open up the door now and let someone else competent run out?
Well, they had. The CBOE's here.
Yeah.
So with Chiak. And that's been the big threat from that inquiry was, if you can't get it together, basically your monopoly's gone, and because Chiak's and FEX are still fairly restricted.
Yeah.
It'll be like, and the ICE exchange, ICE, which ended up buying the London exchange. Yes. They bought a couple, didn't they?
Yeah.
They're super aggressive, but the ASX is just a bolt-on.
Oh,
And they can bring blockchain and a registry that works. Like
it's like bringing a car to a horse race, right?
Oh.
Like, it just
bringing a car to a tortoise race.
ASX. Oh my god.
Yeah. For people who's worked in the markets, in Australian markets, you will understand. Like,
And to give the listeners some context, I founded and ran the Traders Association on the derivatives side for a decade. Not easy to deal with, the ASX, and we were 30% of the market at one stage.
It's like the only exchange in the world where I've seen they've shooten themselves in the foot. You have a beautiful product going, and they're like, let's change the rules and make it worse. Mind-boggling.
So basically, we were 30% of the market. They had zero interest in listening to us at all, and we were the end users of the market. And then volumes have since halved. So
the funniest one is still a 3-year contract, right? So they put proposals out and go market consultation. What do you guys think of this, right? And basically, in this futures contract, the volume died because they halved the tick size. So basically, how I'm firing this quote. You go, okay, look, we know that liquidity has gone down about 85%. We know there's something wrong. Now, what do you guys reckon if we revert? We'll revert back to this for a year. If it works, great, but we're going to revert it back. If it doesn't work, we're also going to revert back.
Yeah.
You see, like...
So I submitted on behalf of the traders, and they said... And the bloke just said, off the record, we've already made our decision. Either way. But I mean, we're getting into the weeds here.
I would like to finally say what I said on Ausbiz is that, so I changed my stance. I called it a lazy monopoly when I had the ASX Bank. I now change it to an incompetent monopoly.
Thank God you didn't call it a buy. Because I've had it on the call about 20 times and I've never called it a buy once.
No, so, I maintain the stance.
But also there's a fair bit of emotional PTSD going on there from paying them hundreds of thousands of dollars a month and then getting ignored. You tend to get PTSD from that.
Exactly. So let's move on. Trade of the week, Vulcan Energy. So just a pat on the back. I sent it out today at 5.88 and it finished at 6. So basically a nice first day of the trade. Vulcan Energy, green energy and lithium. They came out with some news that their first production samples met the standards that they were looking for, and that shot up. And then it's pulled back today, and I thought that's the entry. So they raised 161 million at 585 in early December. So you were able to buy it at roughly the same price. So I'm like, that's a nice low risk entry. And it did shoot up to about 630 or 629 earlier in the week. So good pullback. I think there'll be.
Late November it was at $8.50, or nearly to $8.50. So
yeah, and it's
a good risk reward in that trade.
Oh, and it's all about funding. So they've now secured funding. I didn't check on what stage it'll take them to in terms of their production, but you're in at the same price as the guys that put in the 161 million.
Yeah,
or 164 million. So you put your stop just below those lows. I don't think it gets down there because we're at the same price. There should be some protection there. So yeah, Vulcan Energy trade of the week.
Yeah, and if you want some real in-depth knowledge and you've got a PhD science, Seneca, the boys from Seneca. They're real detailed.
Yeah, they're all over this one.
That was one of the moments where I was so thankful I went second on the call when he had Vulcan. I still was going to call it a buy at the time, but oh my lord, the level of detail.
Oh yeah, mate. Look, this guy was talking about. I went on a field trip with these guys. I went on a lab with them. I'm like, okay.
He's explaining the difference between refining, and I'm just like, oh shit. I'm going, yeah, righto, okay. Thanks, doctor. I really like that one. I've been really keen on that. I've been really keen on that, us putting that on for a while, and we've just been obviously you can have a look at the chart, but it was in a bit of a downtrend there for a while, and JT's been smart enough to be patient on that. Mm-hmm. But yeah, so I'm assuming we're probably a little bit short on time this week, and
are we?
That's fine. Let's keep it short and sweet. But
I think Fear and Greed Index was surprisingly fearful.
Yeah, which we both thought was a buy. So. Yeah, because we were surprised it was fearful. So
and it was quite fearful. Like it was
near extreme.
28. So I was expecting neutral at worst, or I was actually expecting some greed.
Yeah.
but no, fearful. So
And I think Kai and I called not too much movement essentially last week, but maybe a little bit bearish, and I think that's largely where it's fallen.
yeah. So well, either way, we've got Trump coming in next week. So where are we next Friday? Are you bullish or bearish?
Look, I don't know in terms of I don't. It's very hard to be predictive. My level of certainty is very low, but I do think it might be by the rumour sell the fact. I think he might. First week of presidency, he might announce some really big, bold things, and the market might not celebrate them. They might actually go, "Oh shit, this guy's pretty crazy," and uncertainty is never a friend of markets generally. So that's kind of and I think net it won't make any difference in the long run. To truth be told, but if he comes out and is like, we're gonna take Mexico as well, or something stupid, or they start moving troops into Greenland. Well, obviously, which they're never going to do. Sorry, I won't say that. But yeah, if he decides to really beat his chest, I think that markets might.
Okay, so you're bearish. How about you, Kai?
The same in terms of volatility. I think there's just going to be a volatility when it comes in, but who knows?
Well, I'll take the other side. I think it that sort of energy that he brought in once he got elected. I think the markets will do that for at least one week. So that's why I'm bullish for till next Friday.
Yeah, and I mean, look, one thing we haven't chatted about, bond yields this week, which is super important, but it was early in the week, and sometimes but we got to 5 in the 30-year. We got very close to 5 in the 10-year, and that was where bond yields went down. Peaked. I think a couple of big players called it. The PIMCO guy and Citi guy from Citi, or maybe Jamie Dimon. And then we haven't seen that for a year and a half, basically. But in a year where we had 100 basis points of cuts,
bond yields went high.
Bond yields are now up about 10 basis points over the last 12 months, which is probably unprecedented, I suppose.
Yeah, true. But the thing is, it's actually a global phenomenon. So, so the bond yields here in Australia, the UK, even the JGBs.
The gilts is a 17-year high.
Yeah,
which is the UK.
So just in general, cost of financing, as we're going into, I think we're looking at record refinancings here in 2025 as well.
Oh, are we? Right.
On the commercial side, like commercial properties in the US. Just in general, everyone needs to refinance this year. The US has to term out its debt. Like they've got a lot of short-term debt that they need to get onto the long end. So, man, if the bond vigilantes I think they're going to throw a spanner in the works.
But I don't think this moves significantly lower unless there's a break of 5. And we've got US earnings. I mean, quite weak US earnings next week. But even if Trump says something silly, earnings will probably save it the week after. Because it's just rigged or designed to always beat expectation, and we rarely ever see anything. We haven't seen any down earnings seasons for ages, and the economic activities is still solid enough that none of them are going to have a capitulation in earnings. They might have less. Less than the previous period.
Yeah, exactly. Like they might,
but they'll be better than expectation. So. And the banks seem to be doing well, so that's obviously, that's not an economic bellwether, but and then we've got Aussie earnings a month from now as well, so it's going to get real busy.
Exactly. So good start to the year, but let's wrap it up.
Well, stay updated for the